Stop whatever you are doing right now, because if you are receiving the age pension, the disability support pension, or any Centrelink payment in Australia, there are brand new rules that came into effect in April 2026, and these changes could directly affect the amount of money that lands in your bank account. Thousands of Australians are already being impacted, and many of them have no idea it is happening. Some people are receiving less than they expected. Others have had their payments paused because of new compliance requirements. And a small group of recipients are actually getting more money because they finally qualify under the updated thresholds. The question is, which category are you in? Stay with me for the next few minutes, because by the end of this video, you will know exactly what has changed, what you need to do, and how to make sure you do not lose a single dollar of your entitlement. Welcome back to Aus Pension Update, the channel dedicated to keeping every Australian pensioner and Centrelink recipient fully informed, fully prepared, and never caught off guard. If you are new here, make sure you hit subscribe and turn on notifications because we publish updates the moment changes are announced, and in 2026, those announcements have been coming faster than ever. I am glad you are here today, because what the government has just rolled out in April 2026 is one of the most significant pension policy shifts we have seen in several years. We are talking about changes to income and assets thresholds, updated payment rates, new reporting obligations, and an important shift in how Centrelink assesses certain types of income, including superannuation drawdowns and investment earnings. This is not minor. This affects real people, real budgets, and real lives. So let us get straight into it. Let us start with the part that affects the most people, the pension payment rates themselves. As of the indexation review that took effect in April 2026, the maximum fortnightly age pension rates have been updated. For a single person, the maximum base rate has increased, and when you include the pension supplement and the energy supplement, the total fortnightly payment for a single pensioner has moved higher than it was at the end of 2025. For couples, the combined rate has also increased, reflecting the latest Consumer Price Index and male total average weekly earnings adjustments that Services Australia uses to set these figures twice a year. Now, if you have not seen this increase reflected in your most recent payment, do not panic yet. There can be a short processing delay depending on your payment schedule. However, if 2 or 3 fortnights pass and you still do not see the updated amount, you need to contact Centrelink directly or log in to your MyGov account and check your payment summary. Now let us talk about the income test, because this is where things get a little more complicated and where a lot of people are getting caught out. Under the updated rules, Centrelink has tightened the way it treats certain income streams. If you are receiving regular withdrawals from your superannuation account, the way those withdrawals are assessed has been clarified, and in some cases, this reclassification is reducing the pension entitlement of people who assumed they were under the income threshold. The key thing to understand is that not all superannuation income is treated the same way. Account-based pensions assessed under the income test work differently depending on when your account was opened and whether you are subject to the deeming rules. If you are unsure which category you fall into, this is the single most important thing you can get professional advice on, because getting it wrong in either direction costs you money. The assets test has also been updated. The threshold at which the pension begins to reduce, known as the assets test taper, has been recalibrated. The lower threshold, which is the point at which your pension starts to be affected, and the upper threshold, which is the point at which your pension cuts out entirely, have both shifted. What this means practically is that some people who were previously not eligible for any age pension may now qualify for a part pension. This is genuinely good news for those people. If you were knocked out of pension eligibility in the last couple of years because your assets were slightly above the cutoff, it is absolutely worth reassessing your position right now. Go to the Services Australia website, use their payment estimator tool, or better yet, call them directly and ask for an updated assessment. You might be leaving money on the table. Now here is something that is catching a lot of people off guard. In April 2026, Centrelink has introduced updated reporting obligations for recipients who have income from real estate, shares, or managed funds. Previously, many pensioners were reporting these on a quarterly or annual basis. Under the new framework, Centrelink expects more frequent updates, and in some cases, they are cross-referencing data directly from the Australian Taxation Office to verify what you have declared. If there is a discrepancy between what you reported and what the ATO data shows, you may receive a formal notice asking you to explain the difference. Ignoring that notice is one of the worst things you can do. If Centrelink determines there has been an overpayment, they will begin recovering that money from your future payments, which can create serious financial stress. The solution here is simple but requires action. Log in to your MyGov account, check that all your income and asset information is current and accurate, and if anything has changed in the last 6 months, update it now before Centrelink flags it first. Let us also talk about the work bonus, because there has been a meaningful update here that is very much in recipients' favor. The work bonus allows age pension recipients who are working to earn a certain amount without it affecting their pension. The balance and the accrual rules around this bonus have been updated as part of the April 2026 changes, making it slightly more generous for those who want to do some casual or part-time work while still receiving their pension. If you have been holding off on taking a few shifts here and there because you were worried about your pension being cut, it is worth rechecking the current work bonus limits because you may now be able to earn more before your pension is affected. Another important update relates to carer payments and the disability support pension. Recipients of the carer payment and the carer allowance need to be aware that the care load reporting requirements have been updated. If the person you are caring for has had a change in their condition, either an improvement or a deterioration, you are now required to notify Centrelink within a tighter timeframe than was previously the case. Failure to report changes within that window can trigger a compliance review, and in some cases, payments can be paused while the review is in progress. We know that is incredibly stressful, so the best way to protect yourself is to treat any change in the care situation as a trigger to contact Centrelink immediately. For those on the disability support pension, the Activity Requirements Assessment Framework has also been revisited. Some recipients whose conditions are considered episodic or variable may be asked to provide updated medical evidence in 2026. If you receive a letter from Centrelink asking for updated documentation, take it seriously and respond within the time frame given. Get your treating doctor or specialist to provide a current report, because submitting that on time is the single biggest thing you can do to protect your payment. Let us now talk about something that many people ask about, the pension loan scheme, which has been rebranded and expanded. The Home Equity Access Scheme allows older Australians who own their home to access additional income by using their property as security. The interest rate and the compound interest rules around this scheme have been reviewed in 2026. If you have already joined the scheme, check your most recent statement to make sure you understand how much compound interest is accumulating against your property. If you have been thinking about joining, this is a good time to get a proper financial advice session before you commit, because while the scheme can be valuable for some people, it is not the right choice for everyone. Finally, and this is something we want every viewer to hear clearly, there is currently an elevated level of pension-related scam activity in Australia. Scammers are pretending to be Centrelink or Services Australia representatives, calling people and telling them their pension has been flagged for review and asking for personal details or bank account information to resolve the issue. Centrelink will never call you out of the blue and ask for your bank details over the phone. If you receive a call like that, hang up immediately. Always verify by calling the official Centrelink number directly, which you can find on the Services Australia website or on the back of your concession card. Please share this warning with any elderly relatives or friends who might be more vulnerable to these tactics. That is the full picture of what is changing with Australian pensions in April 2026. Let me give you a quick action checklist before you go. First, log into your MyGov account and check that your payment rate has updated. Second, review your income and assets declarations and make sure everything is current and accurate. Third, if your assets changed recently and you previously did not qualify for a pension, check your eligibility again under the new thresholds. Fourth, if you are working or thinking about working, look up the current work bonus limits. Fifth, if you are a carer or on the disability support pension and there have been any changes in your situation, contact Centrelink promptly. And sixth, Stay alert to scams and never give personal information to unsolicited callers. This is exactly the kind of update that Aus Pension Update exists to bring you. We believe every Australian pensioner deserves to be fully informed and fully protected, and we are committed to making sure that happens. If this video helped you today, please give it a like, share it with someone who needs to see it, and subscribe to Aus Pension Update so you never miss another important update like this one. Drop a comment below if you have questions about how these changes affect your specific situation, and we will do our best to help. Thank you so much for watching, take care of yourselves, and we will see you in the next video.